Traders, Jim Simmons here with Neural Street Trading Academy, here to do sort of an extension of the review that we did in the Algo training event on the HFT Algo. There was a lot of requests to do some more training on optimization, backtesting, some of the things that you can do with the HFT Algo from a fully automatic perspective. And so we're going to dive into that here. What I have here is a chart of MNQ. This is a 30 range tick bar on this market, and you can see we've got some signals lining up here, confluence and stacked imbalances. We've got the momentum, we've got the grid, and let me show you what I've got going on in here. This is a great way to, now we didn't test MNQ, right? We tested ES or crude or something when we were in the event. And so let's say you want to trade MNQ. It's a great market to scalp. A lot of scalpers in the futures market scalp MNQ, so it's a great choice for this and for this purpose. So I'm going to disable this here for a minute and just show you what I've got going on. The approach to this here is to sort of start with a wide array of trades to pick from and then narrow your focus down. The best way to do that is to go on the chart and just start looking at it and figuring out what is the market giving you, what is it doing. So what I have here is I have stacked imbalances turned on, minimum imbalance is set to 1, minimum multiplier is set to 3. I have the mode as diagonal, which is kind of the standard, the norm, if you will. You can try it horizontal, see if that works better for you, that's fine. Minimum stacked imbalances, I have 3. Now I'm going to come back to that here in a second, because if you're looking at it going, well, 3 stacked imbalances on 3 ticks in MNQ is nothing, and you are absolutely correct. There's a setting for that. So we're going to leave this set to 3, and I'll come back to that. Cumulative delta look back is set to 3 bars. Minimum percent for coloring is set to 4. This is important when you are dealing with the confluence settings, which again, you can optimize these. You don't want to get too way out in left field here, but that's something good. Another thing that we look to incorporate here on NQ is ticks per level. What this means is that it is lumping together 4 ticks at a time per level in the order flow. Now, why would you want to do this? Well, it's simple, because what will be, 4 ticks on ES is completely different than 4 ticks on MNQ. The MNQ moves a lot more range of ticks, a lot faster. And what you can have in terms of order flow is you can have sort of this this slipping of orders coming through. You might have 3 to 4 ticks with absolutely no orders on one side of the market. You could see, you've got orders here, and then all of a sudden you just get zeros across the board, and then eventually the orders start picking back up. And that's because MNQ moves so quickly that that sometimes that can happen. So what we do to work around that is we lump the ticks together. So now instead of having these 4 ticks, this all equals 1, and then you'd have another 4 here, and then you'd have some there. And so it's going to be a lot easier to work with and test and optimize. So set it to 4. That's a good number, by the way. I don't think that would really be changed on NQ. You could try it at a 2 on, say, an RTY or YM. But ES, crude, you're going to probably stick with 1 for those markets. Okay, minimum combined signals set to 2. What this is saying is that the confluence and the stacked imbalance signals have to be present at the time of the stacked imbalance signal. Okay, so what that means is that your grid is going to show all green or all red at the time of the order when you get the stacked imbalance. So that's adding some confluence, which is, hence the term confluence for the signal. So that's a good way to make sure the market's on your side and the market's been moving in your direction and so on. So that's what's going on for the signals. Now, in terms of the back testing mode here, we want to see all the orders. We've got it set to long and short market orders. But you'll notice here I have stops set to 1 tick. Now, why on earth would I want to do that? And then 1 tick for profit. Trade times I have in here, but I have it set to ignore because I want to look at all the times. See what the difference is in times, for example. Limit trades in one direction. I'm not going to do that yet. Moving averages, don't care. Zigzags definitely care. Swing strength I have set to 2. Now I don't have it set to required because I want to see all the orders, but this is something that I'm going to be looking at. The other one I have here is set to show the VM subpanel, and this is set to 2 right now. We'll come back to that. But we've got the panel on, but we don't have it required. You notice these are not required. Again, we want to see all the orders. Freeze the dome on the signal. What that means is that when you get a signal on the stacked imbalance, it's going to freeze the tape, like we looked at in the event recently. Show strips, yes, absolutely. And there we go. So now I'm going to go ahead and enable this. Now, with 1 tick, obviously I could care less about the performance of this right now. The objective here is to go into the chart and just see what is happening on the chart, what the signals are doing, where they're happening, and look at potentially adding some filters in here to give me some great trades. So I'm going to let this catch up here, and then I will show us the chart and we'll go into the next phase here. Okay, so here we go. We've got it on the chart. And for profit and loss, again, as I said, I don't care about that right now. My focus is to look at the chart and see what it's showing me. Also, nobody in the history of trading ever has traded 1 tick for MNQ. It's not going to work, okay? So why do I have this set for 1 tick? So if we zoom in here, first off, we can see we're not getting every tick on each bar. These are 30 tick bars. How many ticks do we have here to here? Well, not 30 on the count. We have them lumped together, and that's what we were talking about, ticks per level. You can see how they've been lumped together to make it a lot cleaner and frankly more viable. Okay, so here we can see we have a signal. We have our stacked imbalances. There's our 3 levels deep. Okay, in this case we had 4. So this green and red dot looks an awful lot like the stop and target dots. It's because that's exactly what they are. So the entry on this one is either going to be at this tick or this one. It's really, you know, right between that is the exact order. Now when you're doing it this way, the algo is figuring where the actual entry of that move is, of that trade, because it's accounting for orders coming into the market. So when it shows that this is the target and the stop, the entry is exactly here and nowhere else, because the algo, based on the back testing and the engine that has been built into this, this is going to show exactly where the entry is. So if, even though, you know, the stacked imbalance was here, the order came in here because of slippage and because markets move, right? So these are very accurate. So you can hang your hat on it and know that you've got something to work with here. So notice when we came into this bar, we're going to look at several things as we're moving forward here. One is, what is market structure? Are we bullish? Are we bearish on market structure? How do we know? Did we make a higher high than the last up pivot? We broke structure here. Therefore, we have up structure. Okay, so this is bullish now at this point. So we have that on our side, something that we'll be paying attention to. So if you say bullish structure, bearish structure, up or down, that's what we mean. As soon as this paints all green, then this is telling us we're clear for long trades at that point. We can start taking long signals as they come in. And the other thing we want to look at is momentum. What is momentum doing? Are we overbought? Are we oversold? Are we above or below zero? This is important for us to pay attention to, because the objective of what we're doing right now is to see what's working, what's not, so that we can build settings that work to our trading preferences. Okay, so here we are. We've got our first signal. We want to look at now on the chart a few things. We want to look at, first of all, where's the entry? And I'm just going to use a risk reward tool to help me measure what the positive and negatives are for each trade. Okay, so I'm going to go in here and let's actually just set this. We'll do a 0.5 and a 1-to-1, and I'll set this as default so that we can keep using this. There we go. Cool. So this will help us measure what's the follow through before we get any sort of, red. In this case, we went 33 ticks to the upside and no ticks to the downside. Okay, so that's great opportunity. Let's keep moving. We find the next signal. What's the scenario? We're coming out of divergence. The market has stalled out a little bit. Momentum's down. But we do have a signal, and technically still bullish, though we did run through this pivot here. We didn't close on the other side, so it's still considered bullish based on that, according to this. So not a great trade, but the signal's there nonetheless. This one went 37 positive and went 27 negative. So what I would do here is just measure the negative, so I know how much did this one go against us. Odds are we're not going to trade for less than 40 ticks anyway on NQ, especially with a 30 range bar. So, but we'll just leave it like that. And we can come over here. We see we've got confluence starting here, and then back again here, and then we get a signal. Are we bearish in structure? We went up structure. Inside break, but we didn't close below right there. I don't know if that would have been considered structure or not. We'll mark it out and just kind of pay mind of that. This one went against us 39, but you could have got 0.5 before it came to that point, and then it kept going beyond that. So things to keep in mind. Now we're getting into market open. The thing about order flow is you have different times, and you have to consider the volume that is coming into the market. The volume that comes into the market from 8:30 to 9:30 is vastly different than the order flow that comes into the market from 9:30 to 10. So we don't want to even look at this as an example of what we want to do. We want to focus on either this or 10 to noon, or just only look at this. And in this case, we're looking at pre-market and then after the open. So I'm going to focus on those. If you want to look at, off the open, go for it. You're going to need to use a bigger bar. You might need to lump the ticks together more. You might need to go for bigger trades. It's very, very, very active, as you can see. There's a lot of orders coming through. Does that mean it's a good thing? Usually not. Anyway, so we're going to go back to 10 o'clock and start looking at more orders. So here we have another one, broke the pivot, coming through. Momentum is actually technically still up, but actually the BBs are down and the histogram is still up. So anyway, we'll just go ahead and measure this out. So this went, about 26 ticks before it went back to break even. Then it kept going. And we'll just call it went a total of 56 ticks before taking on some additional heat. So we've got a couple measurements in there, and the good thing is we've got our 0.5 that lines up with the other one. Now we get a long order. Besides the fact that there were stacked imbalances, is there anything telling us we should go long in this market? Maybe down here, coming out of support, but not here. It's at the end of a pullback, trading back into resistance, and the market, the structure's down, the momentum's down. There's no reason to get long here. So this is where we pay a mental note or make a note of it on a notepad. If we didn't trade with structure and momentum, that would have bit us. Okay. Then we come down. We've got a short right at the low. Momentum is starting to alleviate here. We don't have confluence at the bar close, but we did at the time of the order. So that's something we want to pay attention to. This one, again, doesn't go very far before going against us a little bit. And then ultimately the most we would have gotten out of that is 27 ticks. So something, again, pay attention to. This broke the high here. Momentum is not on our side yet, and neither are the BBs. And so again, that's something to pay attention to. If we had taken this trade, it's going to give you a max 28 ticks, but the BBs hadn't crossed over yet. But I think it's as you're breaking structure too. At the time of the order, structure might not have been broken at that point. So that might have kept you out of that trade. All right, coming back down, we have a break. This, again, is the orders coming in as it's breaking structure, so I don't know exactly if that system would have, yeah, there's just nothing. I mean, you would have had to put your stop way up here to even get into profitable territory, so we're going to call that one. No matter how you roll the dice, that's a stop out if you take that trade. So what are some of the characteristics? Well, we don't have momentum on our side, and we might not have had structure on our side. So probably not a great trade. Let's keep going. Let's come over here. Structure's down, momentum's shifting up, but we haven't traded through structure yet. We're trading back up into the highs. It's a trade we ultimately want to avoid, even though it worked. Most likely we're not going to want to trade that. Unless you're coming out of divergence, and this algo, none of the algos have the ability to detect divergence. So here we go, we're coming down, momentum shifts now to the downside, structure's down. There's no reason to take a long. If we did, clear stop out. Here we go, we have structures down, and then it shifts up. Momentum's up, hasn't shifted down yet. Technically not a trade we should take based on that. So you can see what's happening here on these momentum shifts is we're seeing coin flip trades. And with the possibility that we could be trading 0.5s on this, we don't want coin flips. We need a significant edge. We need to, if we're going to trade quick targets, we need to eliminate the losses. So let's keep going. Again, structure's up, momentum's up. We should be looking at longs, not short. And here's a long right here. Nice clean trade, would have gave us up to 70 ticks. Really, it kind of went to that wick there, 30 ticks, before it kind of went back to break even and then went a little further. Momentum hadn't shifted. Structure has not shifted. Not a great trade. Here, structure's down, momentum's down. Decent look, just didn't work. Unless you're running a, again, 90 tick stop, which you're probably not going to do. Trading something like this, we'll call this a stop out. Let's come over here. Coming down, structure's down, momentum's down, clean trade. So we can kind of start to see, we see some patterns here. The market is going anywhere from 20 to 40 ticks before reversing a little bit and coming back to break even. We saw a couple trades where we would have had to put 90 tick stops on it, and that's not something that we're probably going to want to do here. So we're going to stay away from those. We can see that momentum, when we're not trading with momentum and we're not trading with structure, we're seeing those trades as the coin flip. You know, we're seeing those come in, you know, they're really just coming in at a 50%, maybe give or take. So that's not really going to work for us. We need a significant edge to be able to trade any of these. And so that's kind of what we're looking at so far in terms of just looking at the charts, trying to figure out what's happening here. Now we can go into this and start to look at adding some filters and see, well, what does that do for us? And we can go in and look at adding some targets and stops and see what that does for us. So I'm going to pull up the settings here, and let's go through and change some things up. So we're going to disable it first and change some of the settings. So I'm going to go all the way to the top down. Signals are fine. Nothing really needs to change there. We're all good. That's fine. Entry, I'm just going to leave at 1. I don't care about dollars and cents yet. And limit, that's fine. Allow entries is fine. Stop loss, let's go 40 minimum. In fact, I think that's probably going to end up being a good number for us anyway. I'm going to start with 40 well, actually, let's do 20. And then we can look and see, are we leaving money on the table? Trade times are fine. I'm just going to leave that as a, actually, I do want to pay attention to this. Let's go 8:30 to 9:25 initially, and then we can look at 10 o'clock and after. Money management, not worried about. Trades in one direction, not worried about yet. Require, we're going to turn structure on. We're going to turn on require VM histo. Enable block level, I'm going to leave that set to 0. This means that if you are overbought, there's 3 levels in the momentum, and then you have your 0. So if this is your 0, that's 1, 2, 3. What this is saying is if our histogram is above 1, it's not going to take a trade. If the histogram's above 2, not going to take a trade. So I'm going to leave that off as an overbought filter. We'll leave it off for right now. That's fine. And then, cool, let's go ahead and enable it. Absorption look back 3 and 11 is what I have it set to, although it's not playing into the trades right now. Okay, so let's go ahead and enable this, and we're going to let it calculate and see what we come up with. Okay, so now I have the momentum turned on. I still have the structure off. Actually, I turned it back off so we could look at these one at a time to see what we like or don't like. I've also set the time parameters from 8 to noon. And what we're going to do is we're going to go in and look at the trades together. There was one here that I had deleted. And so let's go ahead and look at the trades. They're all still here, and we can go in and look at which ones got filtered out or vice versa. So let's go check it out. So we have one trade here going long. This one was right after 8 o'clock. And looks like structure was up, momentum's up, took the trade, and with the 20 tick target, that one worked just fine. I'm going to actually turn on the flags now, and let's take a look at where the trade engaged so we can get exact details. There's our flag. It went 20, could have got 33. Okay, so let's keep going. Now we have this one here that ended up, was that a stop? No, that was a target because we have a small target, got 20. Most we're going to get out of that was 23 probably. So we'll just leave it as 23. So that worked out great. Let's go to the next one. We've got a trade here that came in right at the 9:30, and we talked about we probably weren't really looking at that. We're going to more look at 10 o'clock and after, because it's more relevant. This one maybe because it's getting kind of close to 10 o'clock, so we can just go ahead and mark it out. Got 20, could have got 35. Okay, let's go to the next one. All right, so this is the first one that we have filtered out. It's a winning trade. So because of that, what I'm going to do here is I'm going to put some kind of notice to myself so that I know that it filtered out a good trade, just so I can kind of pay attention to that. Let's come down to this one. Most we would have gotten on this was 26, and we got 20 out of it, so that's great. This one got filtered out. This was a good filter, so what do we want to put for that? I don't know. Let's put an X, so we know that that was a good filtered trade, and that one worked out. All right, this is another good filtered trade. We filtered out another stop out right here. So that was a positive thing as well. We didn't get short because momentum was up. Let's keep going. Take a look at the next one. Clean trade. We got 20. We could have gotten 70. Interesting. Cool. Could have got more, I guess, if you really held on, but my gosh, 70 is a lot better than 40 or 20. Okay, here we go. Next one. Again, great clean trade. We got 20, could have gotten 73, 72, something like that. Next one we had listed as a stop, and clearly we have it as a stop. Didn't really get any positive traction on that trade. Structure's down, momentum's down. That is what it is, so we're just going to delete that, knowing that it is what it is. Let's go to the next one. Yeah, momentum's down, structure's down. clean trade. Could have gotten 40 out of this one. And then this one here, we got another trade back to back that we got 20 and we could have gotten 48. Then we have another one here. Here's my philosophy on this is we've gotten 3 trades in the same direction. You really want to focus on not taking too many trades in the same direction. That's why that option is there. We've got 1 up, 1 down, then we've got 1 up, 1 down, 2 down, 1 up, 1 down, 1 up, 2 up, 2, 3 down, and then it goes to 4 down. So really we should probably look at limiting how many trades in one direction. Let's go down to these 2, and you had another stop out and then finally a winning trade. I think it's going to make sense for us to probably put that at a 3. Most 3 trades in one direction so far. Okay, let's go here. Momentum is up. It's barely up, and we got a stop out. Not getting much out of that trade, so at this point, this one is what it is. So we'll just call it a stop out. This one, 930, we're ignoring that. Let's go to 10. This is right around 10, so we could probably open that up to 950. Got 20, could have gotten 75, 70. Structure's down, momentum's down, got the order here. This one took on some heat. The least our stop could have been was 30. I think 40 is a good minimum if you're using a 30 tick range. We'll just say we could have got, you know, well, really we could have gotten more because it never went back to break even. We could have got 108 out of that one. Let's go over here. Structure's up, momentum's up. It's good. Most we would have got out of that is 30. But with a 40 tick stop, technically it never hit stop, but you really don't want to sit through that. So we'll just say most we could have got is about 30. And that's it for that day. Let's go and see if we have any other days loaded in here. We do not. So that's it. So let's go in and look at the trades again and just see, you know, what's our max opportunity. This is where you could start to take notes and go, okay, we got 70 and 30 and 100. So do you maybe take a 30 tick target, 20 tick target, you know, and then look at trading multiple positions. This is where you can start to take a look at the numbers. So let's go in here. We do have profitability here. It's just set to 10 bucks a trade in target, if I'm not mistaken. Let's go ahead and go into the settings now. And we'll go in and maybe adjust a couple things to see what some real numbers look like. So let's disable it. Okay, we're going to come back in here and let's just try for a secondary target with a trail. So we'll put break-even trigger 40, trail tick offset, let's just do 40, break-even plus 2, and we're going to just trail, we'll just go 40 across the board. Let's go with a 20 and a 70. Let's see what that looks like. And then now we've got 40 ticks, which is 20 bucks of risk. Let's put 10 contracts on. We'll go 5 and 5. That'll put us at 200 bucks of risk each trade, so we can get real numbers. And then let's go ahead and re-enable it and see what the numbers look like, if this is a good starting point. Enable. Good. I'm going to run that and let's see what we come up with. Okay, here we go. So we've got our numbers back. So we're at 745. Remember we said we put 200 risk on each trade, and we got 745. So net 3.5 winners. Let's go ahead and take a look at the orders. First one was a winner. Second one didn't make it to the second profit target, stopped out. Oh, we said it's a 40, not 20. That's why. That one, first one, yes. Second one, no. First and second, yes. First one, yes. Second one, break even. No, trail stop. That engaged the trail stop. So that one actually would have been better off at 1.5 target across the board. This one, pretty much same thing. This one, yeah, clearly it's not an advantage for us to have the two targets. We're not seeing too many of them hit. In this case, we'll probably see better results all in, all out. So let's run it that way and see what we come up with. Okay, so interestingly enough, there's actually less profit by doing it this way. So very interesting. We do have this stop out that we talked about, putting a 3 limit. That'll help us out a little bit. Let's do that and then look at the idea of running an additional target in here. So let's go ahead and do that. Okay, so I've got the settings up. Let's go to max trades in one direction. It's in here somewhere. There it is. And let's set it to 3. Still all in, all out for now. I want to run it first, and then we can maneuver from there. Okay, cool. So the three trades in one direction obviously helped us out here, bumped us up on the profits. Let's go ahead and look at an additional target again. The way that I'm going to do this here is I'm actually going to pull up the performance, and I want to start with looking at the all-in, all-out scenario first. Now, granted, this is only 2 days, so we don't need to get too hung up on the details here, but it looks good. We've got a good profit factor, good number of trades. Looks good. So the other thing I want to look at here now is I want to look at the time of day next. And I want to look at entry time. It's important to keep it set to entry time. So from 8:30 to 9 is not profitable. From 8 to 9, there's 1 trade. So clearly, it's going to be an advantage for us to start at 9 and then go till 11. And now we do still have the open set to trade, and it's profitable. There's a good number of trades, so we can just leave that. So we'll go in and change it from 9 to 11 first, and then we'll look at adding another target here. So let's do this first. We'll go in and disable it. Let's change the hours, 9 to 11. Re-enable, hit go, see what this comes back with. Okay, we got an extra $100 out of it. Let's go to our profit. Profit factor went way up. We eliminated 5 trades, and the profit factor went way up as a result. We didn't get a lot more money in this case because we eliminated 5 trades, but profit factor went way up. Let's go to half hour of day. Yeah, much more efficient, clean, good. Looks great. So now what I'm going to do is I'm going to leave this, and I'm going to move it over to the side. And now we're going to test for an alternate target. Okay, so what we'll do, this would be like if we were trading a second target. And I like to, it removed my, my strategy. That's okay. So we had 900 in profit, 5.5 profit factor, and I think there was 12 trades, I think it was. So now let's go ahead and modify the target. We're going to test these separately. Whenever you're looking at adding an additional target, you always want to test it separately. If it's not more profitable, then there's absolutely no point in adding a secondary target. So we're going to start with it set to 40, which is, 1-to-1 risk reward. And let's see what we come up with in terms of profit. Profitability here is the key when you're looking at secondary targets. If it's not more profitable than the first target, then we're not going to use it. It's that simple. So let's go ahead and enable this and see what we come back with. Okay, so here are the results. Clearly more profitable. Going 1-to-1. Profit factor is not as good. Trade numbers the same, obviously, but we got way more profit. And the 3-point profit factor is good any day of the week. So this is great. This is telling us realistically we should probably look at trading 1-to-1. Although we did have a stop out here. That was green. That one's green. Good to go. Stop out. Good to go. Good. Probably some room to even run a little bit more. Let's go 1.5 targets and see what that looks like next. So we will do that. And then let's go to 60 ticks target. See if that's any better. And we'll run it that way now. And then next, we'll run it at 70 because that was seemed kind of like a magical number for this chart. So with a 1.5, we actually squeaked out even more profit. So again, this was pretty great. Let's see what the numbers look like. 3-point profit factor again. Not sure how that's possible, but it is. And yeah, good numbers. We can go back in and look at half hour of day. I don't think it'll really make too much of a difference, but here it's saying 9:30 and on was a little better. There's only one trade at 9 o'clock to 9:30, so not a big deal. Let's go ahead and try it now for 70 ticks and see if that makes much of a difference. I don't want to get caught up though in over optimizing it. Like 60 is a good clean number. If we're leaving 10 ticks on the table, are we really that concerned with it? Probably not, but let's run it at 70 just to see if we give up any wins. As a result, we were 66% winners on the last recording there. So let's see what we come up with on this one. Okay, so now we've got even more profit, of course. 3.5 bumped the profit factor. Didn't give away any wins. And so that was a good number. I think realistically we could just say 60 to 70 is a great target for this setup. At this point now, what we would do is we would look at, could we leave this on as a secondary order? So what we would need to do is we would need to look at the first order at 20 ticks or 40 ticks. If you're going to trade a secondary, you would look at the second order being 40 tick target or 60 or even 70. And you would need to have a break even set. If you have 20 ticks for your first target, well then your break even is going to be 20. Or if you have it set for 40 and you're running to 60, then you would have it set for 40, right? So you would set your break even. And so depending on how you want to really run this, you're going to want to run it over a bigger time frame, obviously, and then just optimize for what's going to give you the best performance in terms of running these separately or together. When you're running this, though, you do still want to keep the orders separate when you're running them to see, would it be better to just leverage this position, or should you split them into two different orders? Are you going to trade the first target at 20, the second target at 40? If you're going to do that, then what you're going to do is you're going to run this to 40 ticks target with a 20 break even. And you're going to look at this test compared to this one, which we know this one made us $800. So let's just use an example and let's do it together to where we have 40 ticks with a 20 break even to see, is it better for us to do that, or would it have been better for us to just leave it set to all in, all out at 20 ticks, right? So we come in here, we're going to do this, we're going to set it to 40 ticks now, but we're going to use a break even trigger of 20, and we want to know, are we going to make more than $800, which was our number at the 20 tick target? Are we going to make more money than that, or are we going to give money away? Because otherwise there's no sense in even having a secondary order. We would just put them all on the first target. So let's run it this way See what we come back with. Okay, so running it with a 40 tick target and a 20 tick break even was not an advantage. So that model would not work. We know 20 is decent. We know 40 all in, all out was better. We also know now that 20 with a 40 is not good. So automatically we can cross those out and go, the only thing that even makes sense for us to trade is either all in, all out at 40, all in, all out at 60, all in, all out at 70, or we can do 40 with a 60 or with a 70. So just for grins, let's go ahead and run the 60 with a 40 tick break even and see what that looks like. Can we make more than that number, which was 1200, and would that be an advantage to us? So let's go ahead and disable it. And we're going to go in here now. We're going to change these numbers to 40 target, 60 target with a 40 break even. And this would simulate what it would be like to run that as a 40 break even on the secondary order with a 60 target. So let's see what this looks like. Here we go. Okay, so we came back at 1230. It's virtually the same as what we came back with the 40 ticks all in, all out. So at this point, really the scenario is with this chart was to run it as a 40 ticks all in, all out type of scenario. So let's go ahead and go back into the strategy. We're going to save this, and now we're going to back test it over a bigger data set and see what that looks like and make sure we've got something solid to work with. But this is how we would start with getting our settings put together. So we'll do 10 is fine. We'll do 40. I'm going to eliminate the break even, and let's set this to 40 ticks target. Okay, so I think we've got all of our settings in here. That looks good. Let's save this as a template. We're going to just call it MNQ SI CO, which means stacked imbalance and confluence. We'll just save it as that for now. And now we're going to go into the back test, and we're going to pull up that template right here. Everything's going to pull up for us. We're going to set our market, MNQ, and we're going to test a couple weeks worth. Let's test it go into the 16th too, because we haven't looked at that time period yet. We were looking at last couple days recently here. So let's just double check everything, make sure it all looks good still. 3, 4 ticks per level 4, good. Flush is off, confluence is on, stacked is on. Looks like everything carried over for us. Cool. Okay, let's run the back test, see what we come up with. Okay, so here are the backtest results, and one of the things that I really wanted to focus on in this test was what's happening for each half hour of the day. So here we can see the only time that was really profitable with these settings was from 9:30 to 10. Now, the other 9 to 10:30, not a huge deal because they are, well, this is 10:30 to 11 actually. So these two times aren't that bad. 200, 400. Normally I would not look to really exclude those. The time that I was really looking at though, especially, was 10 o'clock and after, and we can see in this case that it was not profitable for that time. So we may need to look at optimizing for this 9:30 to 10 and then expand it out and see what it looks like over the other times. So this is where we are at currently. Let's run it just 9:30 to 10 and see if we need to optimize anything else. We can look at optimizing some of the parameters in here like this. Minimum multiplier, we can optimize that. Minimum imbalances we could optimize. Let's see what else. Ticks per level I'm going to leave at 4. Cumulative delta, look back, and minimum percent, we could even optimize those. So you could see how you need to kind of, sometimes you need to go back and forth a little bit. I do like that we are at 40 ticks on the profit target. It puts us at 1-to-1, which is great. I'm going to update the start time and the end time. So let's change this to, I'm going to change it to 9:35. Maybe 9, well, let's just leave it at 9:30 for now, and then we can go look at the times. Cool. And then let's go 10 o'clock. Good deal. All right. Everything else should be fine. Let's go up here and look to do some of this. Let's just go 1-to-2 and minimum multiplier. Let's go 2-to-4. I don't want to get too many iterations because these tests do take a while to run. Minimum imbalances I'm going to leave at 3, and then let's run it this way and see what we come back with so far for this. Okay, so here's our results of the back test with multiple options here in terms of minimum imbalance and the multiplier. So best numbers came in at 2 and 2, so 2 multiplier and a 2 imbalance minimum. So that's interesting. Some of the other numbers are pretty much in line. There's looks like this one was 1 imbalance, 2 multiplier, 2 3, 1 3, 2 4. Kind of all spread out. Really not a huge difference from one to the next. We don't have a huge data set, but the most trades yielded the most profit. Actually just a little bit less than that. So filtering that one loser out, it looks like. So not much of a difference between these two, 1 and 2. But it did filter out one trade, and then the rest of them are minimum all, for the most part, coming in at 2. So let's stick with this at a 2. And just for fun, let's go, well, here, let's just leave this at 2 as well. All right, and then let's go over confluence and minimum delta and look back. Let's optimize for these. So look back, let's go 3 to 5. And then minimum delta, let's go 3 to 5 here as well and see what these come back as. Now, as far as the time goes, I did limit this from 9:35 to 9:59. You don't want to see any orders coming in right at 10 o'clock, so I've omitted those, and then the giving us 5 minutes off the open is helpful. The other trades just weren't great off that time anyway, so let's go ahead and run it this way and see what we come back with. Okay, so here's our results. We actually got some improvement by adding these factors in here, going to a 3 look back with a 3% for coloring. That actually improved things, gave us some more winners on that. So we'll go ahead and save it this way, and I think we should be good to go. Let's go ahead and save this, and then that should be pretty much about it as far as the optimization process and how you go about getting everything going. So we've got 2 2 3 3, yep, ticks per level. We've got 40 and 40, just a half an hour of the day, and so we'll go ahead and run it one last time just to make sure everything checks out, and then we should be good to go. Okay, yep, everything lines up. Let's go back to our analysis now. We can take another look. Yeah, the dip's not too bad here. We had 3 losing days and the rest were profitable, so that's good. We go to half hour of the day. Obviously, it's just going to be the 1 half hour because that's all we're using here. On a trade-by-trade basis, you know, pretty decent. Went sideways there for a while, which is not great, but then it ended on a positive note. So again, it's a small sample size, so it's something to work with here. So we'll go ahead and save this again just to make sure we've got it, and then we can rename it and all that. But you know, this is ultimately the process for optimizing. If you want to go into the chart and take a look at the trades again, and you can go and see them. Let's go back here. So we had, you know, zooming in here, nice short there, another short there, another short there, 3 in a row. tried to get long and took a stop out. Again, you can kind of filter these, according to your preferences. If you want to flip it on and off as you see fit. Really the market's not telling you to get long here. We haven't broken structure or anything like that. But if you're using it fully automated, then this is the way to go about doing it here, right? So we've got short here, short stop, and then another short for a win. So yeah, looks good. I think we'll go ahead and save this and run with it. So that's going to do it for this video. Hopefully this was informative and gave you some additional insight onto this. Of course, if you have any questions, feel free to reach out to support, and we got you covered. Have a great day, traders, and take care. Cheers.